Good morning. I'm Steve Wolf, Wholesale Marketing Associate at Sprague.
And I'm Joel Williams, Director of Refined Product Sales here at Sprague.
Welcome to Sprague's Refined Products Review, where we discuss what's moving the market and giving you insight into what we see every day. So Joel, let's start off with the Strait of Hormuz. Why is it getting so much publicity lately, and what kind of problems does it create?
I think the best way to maybe explain this is to kind of talk about physically what's happening there, and I'll kind of use the garden hose analogy. And if you think about the Strait of Hormuz, is that normally it's like a garden hose that's just flowing, and the product's flowing through steady, and it's coming out as quick as it's coming in, and everything's working good. And what we've seen now is with the shutting of it, we've seen you kind of kink up the hose, and so what you see from that is that there's still water on the other side of that hose that's flowing through. So we still have all the crude that had come through there several weeks ago. I mean, it takes 4 weeks to get from there to the US. So that's all still coming in. But everything behind it's backing up. And so, what we'll see is eventually when they open it, we'll kind of see what you'd expect, which is that it's going to come flying back out at you. And so all of a sudden there's going to be a glut of oil, running at you. Where the garden hose analogy doesn't work is, we all know the normal garden hose, when you kink it, the water just backs up and it stops. Think of this more as like the cartoon garden hose, where, when you kink it up, you start to get that bubble. And that bubble is going to keep growing until it bursts. And the challenge is you can't let it burst. If you slow a well down, it's not that big of a deal when it opens back up and you can speed it right back up. But if you start capping these wells, it's extremely expensive and time consuming to stop the flow. But the bigger issues on the other side, it's even more expensive and even more time consuming to get those wells flowing again. So yeah, the real challenge then here is, how do we avoid that tipping point so that, we can get production back up and running as soon as the strait opens up. So, that's what really remains to be seen here. And that's what, we're looking at very closely.
So what are we seeing in the markets with all this erratic crude and the other product pricing right now?
What we saw Sunday into Monday was something historic that I've never seen in this industry. I mean, Sunday night the markets opened instantly up 50 cents. Overnight up as high as 85 cents. Settled pretty close to even on Monday. And what you're seeing here is the market, it's trying to react and build the right risk premium. How long will this war last? And what are the actual known impacts? So we don't know how long it's going to last. We've been told it's almost over, but whether that's days, weeks, or months, we really don't know, and it makes a huge difference. We know what is actually being reported and what's happening now, so that's one of the things that we have a good grip around. The next question becomes is what else is coming next? How much more energy infrastructure is targeted? And then the big question becomes is that when it's all done, what is the condition of that energy infrastructure when it comes down to ports and the wells and refineries? It's not like that they can be built right back again. That takes time. So anyways, you're looking at kind of that, again, the duration, the destruction, and the reconstruction.
All right, let's shift to the Northeast. Should we be concerned about supply up this way?
Generally we're in pretty good shape up here in the Northeast. There's still crude coming in. Again, as I said, the crude that had already got through the strait is still on its way here. The U.S. has got plenty of crude that we're producing ourselves. So in general, we're in pretty good shape for crude. If we got in tougher shape, this administration has tools. I mean, you have the Strategic Petroleum Reserve. You have the ability to put on export bans, none of which are great solutions, but you have the ability to ensure that we're still going to have oil here in the U.S. So that's good. And for the foreseeable future, we won't have any challenges on the inventory side. But what we do have a challenge is it's really the cost of holding this inventory right now. And the reality is that the markets are created in a way to self-adjust for themselves. And so they have this tool called backwardation where the prices are higher for product in this month than they are in the future months. And what that does is it signals to the market that the market really needs your inventory. And so it's giving you this huge incentive to sell it, and it's giving this huge punishment to hold it. And so, the best financial thing for a lot of the suppliers to do would be to sell out all of their inventory right now, go dry, and then refill once the market calms down. Obviously, we don't have that luxury. We have customers that we have to take care of every day. And so this huge cost of holding inventory means that we can't just fill up the way that we'd like to fill up. I mean, it'd be financially crippling for us to do that. It just wouldn't allow us to sustain our operations. So as such, all these suppliers are all having to go hand to mouth. And it means you're carrying lower inventories and kind of just-in-time inventory, which is great. The only challenge with that is that just-in-time inventory means that everything's going perfect. You know exactly what your supply is coming in and exactly how your demand's going out. Any competitor falling down in the market, all of a sudden demand shifts to you. Any type of barge delays and supply takes a little bit longer. So I think what you'll see is as we all adapt to this hand to mouth is, there will be hiccups at time to time. They should be short-lived. So I would say everyone, just hold on. There will be plenty of product for you. In terms of the pricing, it's going to be erratic. So bear with us. We're reacting to the market 24/7. But, I think we're going to do a pretty good job of keeping ourselves wet through the entire thing. But, talk to your sales rep. Let us know what's going on, and we'll keep you informed. Finally, I really want to send a shout out to our parent company, Hartree Partners. They've been invaluable during this time. For those who don't know, Hartree is a world-class energy commodity trading company. It's been doing this for decades. I think when you take, 150 years of Sprague doing this, and you take some of the best traders in the world at Hartree, combining, we put ourselves in a pretty good position to continue to serve our customers. So bear with us, keep calm. We're going to get through this just like we always do. Thank you.
Well, thanks so much for joining me today, Joel.
Thank you for having me on, Steve.
And if you haven't seen it yet, check out our latest special feature, a panel discussion with Sprague's Women in Leadership, available now on our YouTube channel.
Yeah. Well, that's all we have for you today. It'll be another busy week coming up. Thanks for joining us. We'll be back next Wednesday with another Refined Products Review. Refine your insight.
Fuel your success. Good morning. I'm Steve Wolf, Wholesale Marketing Associate at Sprague.
And I am Maximus Meridius Decimus, leader of the armies of the North, commander of the Felix Legions. All right, let's take that one from the top again.
Let's go to, yeah.
I didn't know.